Good morning, dear members. I welcome you all for this breakfast meeting on NFRA observations in auditing standards. And to dwell upon this subject, we have CA Mohan R Lavi sir. May I request our senior member, CA Mohan R sir, to escort the speaker onto us and welcome him with the floor. Thank you, sir. Thank you so much. I have privilege in introducing today's speaker, Mr. Mohan R Lavi, is qualified as Chartered Accountant in the year 1989. He has over 25 years of experience in industry across a variety of industries. He has worked in senior positions in finance, in manufacturing and software companies. Mohan also has over 6 years of experience in practice. At present, he is a partner with Mrs. KP Rao & Co. Chartered Accountants, Bangalore, and heads the Ind AS and GST practices of the firm. Mohan is the author of books on IFRS and Ind AS, key audit matters and other related topics. Mohan has spoken at various conferences in India and abroad on accounting standards, IFRS, Sarbanes-Oxley and GST, and is a faculty member with Institute for their IFRS certification course and registered valuer programs. His articles appear frequently in Hindu, The Hindu, Business Line, Deccan Herald and the Bombay Chartered Accountants Journal. With this brief introduction, I present before you CA Mohan R Lavi sir. Over to you, sir.
So, good morning. First of all, let me thank Manjunath and of course Manoj Gupta sir for senior member of the profession. He comes for, whenever I am speaking he comes, I do not know why. But yeah, so I should thank the Bangalore branch for inviting me here to talk on a topic which I think is becoming a little bit, not only I won't say important, it's obviously very, very important, but I think for the profession it's also a little bit of a concern. It's a concern for the profession because we need to gear ourselves up to face and to see what NFRA is doing as an entity. More importantly probably, how do we gear up for the future? Now, let's assume that NFRA have done some reports, some observations have happened, and I'll talk about that in some time. But what is going to happen in the future? I think that is what is going to be the key takeaway from this particular session. So, there could be a few observations which would concern the members, but don't worry about it. Members have faced many challenges in the past. I'm sure that this challenge also we can get over. So there's no need for you to worry about anything which is going to come from, at least from the regulatory perspective. So one of the reasons why this topic is important here today is because over the last few years, regulators in the country have become extremely active. You talk about SEBI, you talk about NFRA, you talk about MCA, you talk about any of these regulators, they've become extremely active. And active in targeting the profession or in looking at what the profession is doing. The Income Tax Department has passed some orders, SEBI has passed some orders. So over the last few years, we are seeing this trend where the regulators have become active. Good, bad or ugly, we will come to later on. We will not worry about that right now. So that's the immediate thing which we have to be worried about. The regulators are looking at our reports very seriously, with a fine-tooth comb, if I may say, and they are passing comments on what we have done in the past. So that's the first thing which is very, very important. Because of this regulatory action, investors are becoming extremely worried. they are saying that what is happening now? Is this something should be concerned about? Is this situation wherein we have to probably take some action? You know, these investor protection groups, they are becoming extremely active in the country. They are asking the shareholders not to vote on certain resolutions, including on reappointment of auditors in a few cases. The investor protection groups are becoming extremely active and are sort of giving advice on basically the regulatory actions which have happened. But what about us? Auditors are still normal. I'm not saying abnormal and all, but we are continuing to do what we are doing. So we have on the one hand active regulators. We've got investors who are extremely worried and who could possibly vote us out in AGMs also. But we've got auditors who are doing what we have to do. I think what we should probably do is we should also become a little bit more active. That is the purpose behind this particular session as to what auditors can possibly do to probably protect themselves against any problem should come up in the future. I never thought a situation would come wherein I'll have to use this word, saying we have to defend our past audits. I qualified in 1989. I never thought that we would come to a situation or we would come to a day wherein somebody can question our audit and we'll have to defend our audit, which is exactly what we are trying to do for both SEBI or NFRA or any of these regulators. But this is reality. We can't escape it. Though NFRA is only for listed companies, I am somehow getting the feeling that whatever NFRA is doing may trickle down to the QRB and the FRRB also. It may come down to the QRB reviews and also the FRRB reviews also. So, but anyway, we don't have a choice now. We will have to defend the past audits done. And I did, of course, tell you about this aspect of it. The first part is that this section 143(9) and 10 of the Companies Act. See, 143(9) just said that every auditor will comply with the auditing standards. It's just a blanket one-line sentence. Doesn't say anything apart from the fact that every auditor shall comply with all the auditing standards. 143(10) goes on to say that NFRA can also prescribe auditing standards. Till NFRA prescribes, whatever auditing standards have been issued by the Institute of Chartered Accountants of India will hold good. So, NFRA has not done anything in terms of auditing standards as such, so they have sort of blessed whatever auditing standards we have got or whatever the Institute has issued. So, I don't know whether they will probably come out and say that, we will have to follow some other standards and all those. There is a little bit of a background to this. If any of you have observed the NFRA orders, you will find references to something called as Public Company Accounting Oversight Board orders, PCAOB orders. Now, PCAOB was a reaction to Enron in the US. NFRA can be taken to be a reaction to both Satyam Sahara and Punjab National Bank. So, though NFRA took some time to get established in the country, PCAOB was sort of established almost immediately. Now, PCAOB has done a lot of work over right from 2004 up to almost 19 years now. All their reports are in public domain. All the reports are in public domain. At least earlier, when I was reading those PCAOB reports, I used to say, okay, they are actually finding out real problems which have happened in the audit. And most of their initial reports, I can probably say that 2004 to 2010 was focused only on documentation. Their observations were only on documentation, audit documentation. But later on, I will later on give you an order which is absolutely a horrendous order against a CA firm in Pune. Absolutely, none of us can probably even expect that such an order will be done. So what NFRA has been doing is that they have been reading these orders. They have been reading all these PCAOB orders, and whenever there is a equivalent offense, they are trying to match it with that. And say, see, you know what, US PCAOB said this, so we are also going to say this. That is a concern. That is a real concern because of the fact that though the, what you should say, the population of companies chosen by the PCOB are much more, the offences they have found out are extremely, in some cases extremely problematical. NFRA has to that extent sort of looked at only serious cases, so we don't have to worry too much about the smaller parts of NFRA, because right now they're only looking at listed company audits. They may not come to a private limited company or to a large company audit. They may not enter there as of now at least, but we never know. You know, once all the listed companies become compliant, what are you going to do, right? I think for professionals, I need not tell you all about this. All I can tell you all is that even though we have been following the international auditing standards, we are still following international auditing standards, ISAs as they are called. The comfort which professionals can get is the fact that you choose any area of audit, there is an equivalent auditing standard as of today. You choose any area of audit, there is an equivalent auditing standard. So I will take you back to 143 bracket 9 now and say that you have to follow all this auditing standards. So you definitely have to follow all the 46 standards wherever they are applicable. Commencing from quality control up to the risks in an audit, up to audit evidence, going on to audit reports, you name the area, institute has got an equivalent and matching standard for that particular district. So all we really need to do is to ensure that those auditing standards are complied with. Easier said than done, but yet we will have to ensure that this is what these auditing standards are. Some of these may be amended in due course of time because ISAs also are being amended. But I would want to emphasize on members the importance of this 500 series on audit evidence, because this forms the core of our audit. I mean, assuming that independence has been met, assuming that all those things have been met, you know what are the risks in the audit, assuming all those things are taken for granted, this 500 series becomes extremely critical. I'm not saying I should ignore the other series, but the 500 series becomes important because this is the core of the audit. Commencing right from your, what are the audit evidence you're going to take, external confirmations, every single thing has been covered in this 500 series. Materiality, audit sampling, and you also take a look at 550, which talks about related parties. See, there is a very interesting thing which I have observed. You take right from Satyam onwards. You take Satyam, you take ILFS, you take DHFL, you take any of these cases where the problems have happened. What is the common theme in all these things? Transactions that happen to the related parties. That's a definite common theme. Apart from, of course, they have misused the financials and all those things, whatever it may be. But most of those cases, transactions have happened to the related parties. Now, both the accounting standards and auditing standards says related party transactions, arm's length disclosure should be there. They are not preventing related party transactions. Nobody is preventing it. But arm's length and appropriate disclosure has to be made, which is what even SA 550 also talks about. So, in case required in terms of criticality and importance, because if you go back to these other series and talk about the 200 series, not saying what are the risks in the audit also, these auditing standards will also have to be met or read rather with the code of ethics. Now, code of ethics is all of our, I think Bangalore branch has done plenty of programs on code of ethics. It's now in 3 volumes. Code of ethics is now become like income tax act now. 3 volumes with case laws and all. You got case laws also in volume 3. According to me, I mean, it's an extremely detailed code of ethics. I don't have, any objections to the code of ethics. It has to be followed. There's no going around that. The threat we all face as professionals, the biggest threat we face is the threat of familiarity, according to me. We think we know the auditor very well. Auditor thinks he knows the auditor very, very well. And we go ahead and audit assuming that. The Code of Ethics has specifically pointed out the threat of familiarity. Now, if you look at the threat of familiarity with the auditing standards which we are talking about here, we are probably going to say, oh, yeah, I know that auditing very well. So, last year also it was noticed, so this year also it may not be there. That is the comfort which should not be having. So that's why I am saying that we have to read it with the code of ethics. That this 200 series talks about those aspects also. I will now move on to these regulatory aspects and talk about what these various regulators, I focus more on NFRA because though it is for listed company audits, I think for any of you who do not have listed company clients, the takeaway is going to be very simple. A watered down version of NFRA may come in the QRP and FRRP. It may not be as severe as what NFRA has been doing, but we may have a toned down version. The lessons from NFRA may probably trickle down to the QRP and FRRP report. So we need to be a little bit more careful about it.
In fact, we have already started.
They already started, sir. Yeah. So it so happened that the Serious Fraud Investigation Office was established with a view to review serious frauds. I do not know that word review is correct or not. Nobody reviews frauds. Now to take necessary action against serious frauds. Which brings us to a very important question which I'll tackle on frauds a little bit later also, is that whose responsibility is it to report a fraud? Okay, that Companies Act is there, all that we know about it. Detection, we know very well. It's not the auditor's responsibility, it's established beyond doubt now. But now NFRA is saying that in case you are smelling a fraud, you will report to the central government. Reason to believe that a fraud has happened. But reason to believe is an extremely dangerous word. What is reason to believe a fraud? It can be anything. But these regulators have now, they have also got a little more of experience and they are only looking at probably frauds which are, what should I say, material in nature, shall I say, or very significant in nature, very important, very big frauds have happened. SFIO was doing it based on reports given by Ministry of Corporate Affairs and SEBI and RBI. That was SFIO's task. After NFRA came into play, SFIO, they are doing it, but they are not doing it as actively we are doing it. NFRA is taking up all these investigations from, the reports from NFRA have basically come from reports sent by either Ministry of Corporate Affairs, ROC, SEBI, RBI or any of these regulators. Only in a few cases, NFRA has taken up cases wherein they have got information from the public domain and investigated a few audit reports. Otherwise, invariably, they are done only on this basis. If you go to the NFRA website, you will find, if you look at orders, including one which has come day before yesterday, from 2020 to 2023, there have been 54 orders issued against practicing child accountants. The firms are, of course, different firms. So maybe if you take the firms, maybe about 10 or 12 firms have been, also debarred from this happened over a period of 3 years. The punishment has been either a monetary penalty and not being in practice or not continuing in practice, not being permitted to be employed as an auditor for a particular period of time, 6 months, 1 year, 5 years, it's gone up to a maximum of 5 years. Most of the orders have been both. The combination of monetary penalty as well as the debarment from practice for a period of time, years. Extremely tough orders to read. It reminds me, of course, I'll take them back a little bit past just to talk about how things have changed. In 1970, if I'm not wrong, there was a child accountant in Gujarat practicing in Ahmedabad called Mr. Patel. He wrote a small book, very relevant to today's times, but still, it was relevant that time also. 40-page book. How to convert black money to white. It was a 40-page book. 1970. It was an English edition. No need to say it was a obvious hit. Sold many copies. 1975, he put a Gujarati version also. Because most of the sources from Gujarat only. Conversion happens in probably Calcutta, but source of the money is coming from Gujarat probably. 1978, somebody informed the institute saying that, what is this happening? Chartered accountant is writing a book on black money. And is it not professional misconduct? Why are you not taking any action against him? You please see how many copies the book has been sold. I think you should take some immediate action. You should, DC committee immediately sent a letter to him and said that please come for a personal hearing. We have been suspected of professional misconduct. At that time, Code of Ethics was only one single volume, no 3 volumes, no case laws. So they sent a reply, institute sent a notice saying that please come for a personal hearing. You have reason to believe that you have got professional misconduct. He was extremely busy promoting his book and selling his book. He ignored the notice. Second notice, third notice, he ignored it. Institute also forgot about it. It was just lying there. In 2002, you will not believe it. When was the book written? 70. 2002. Somebody in the institute got up and said that what is this case pending for such a long time? Let's call him immediately. So they sent him a final notice and told him that if you do not appear for a hearing now in person to Delhi, we will pass orders expiry. Mr. Patel received the notice and said that I think it's time to go and visit the institute. So he went to Delhi. After 32 years. And the institute told him that you have written this book? He said, yes, I have written this book. I had written this book. Now it's no longer being published. Is it not professional misconduct? I agree, sir, it's professional misconduct. No doubt about it. But I stopped writing the book. They said, no, we have to take action against you. They said, sir, I told you I'm guilty, so whatever action you want to, please take. The DC said that we are going to ban you from practice for 6 months. Mr. Patel said, sir, see, now I'm 70 years old. I've stopped practice also. Even if you ban me permanently, I don't have a problem. Because I don't have a problem with that. Institute said, no, we can't do all those things. There are no regulations for banning permanently and all. Only 6 months we'll ban you. So they gave him an order banning him for 6 months. As he was leaving the room, they asked a very interesting question. Do you have a copy of the book? They asked. For, I do not know for what purpose. Maybe to give in the library. Maybe that's the only interest. Not definitely to use the book. 32 years, just imagine. These orders are coming in 1 month. NFRA orders are coming in 30 days now. So you can see how the shift has happened from the DC to, what the NFRA has been doing. Of course, I should tell you all that most of these 54 orders, almost 50%, are against auditors of Divan Housing. All the rest are, there are 4 or 5 against IRFS, a few against Cafe Coffee Day. All the others are for individual CA firms, individual firms. But the focus of NFRA appears to have been only on auditors of Divan Housing. Now, Divan Housing, as all of you all know, was, you name it, there was a problem there. Similarly in ILFS also. These were NFRA, they were easy, pickings for NFRA because so much of information was in public domain. ILFS, everything was in public domain. When Uday Kotak took over as ILFS, he said, first you give me all the reports. I want to see all the reports even before I agree to take up the role as a, the person in charge of the liquidation of ILFS or, selling of the assets of ILFS. They had an easy task. Similarly for Divan Housing. Many of the regulators, the Enforcement Directorate, CBI, you name it, they all were there. They had enough of masala. But if you look at the smaller audits, which listed company against, which now NFRA has seen, they were based on information which is available from the annual report of the company. That is the difference. They have taken the annual report, looked at what the annual report has to say, asked the auditor some questions, and accordingly taken necessary action against the auditor, saying that these are all the things you have not done. Very interestingly, in Diwan Housing, what happened? When NFRA was investigating, they initially called for investigation. As I said, they initially called for some reports. At that time, CBI was, enforcement authority was extremely active in Diwan Housing. One of the problems in Diwan Housing was loans, housing loans given for non-existent borrowers, just to shore up the balance sheet. One of the problems there was that. They said the borrower is non-existent. So a friend of mine told me this. I believe there was a meeting happening between ED, NFRA and all in Bombay. And the ED person asked the people of Diwan Housing, okay, which branch were these non-fictitious loans given from? We'll have to go and see that branch, which was the branch in which these loans were given from. So I believe the Diwan Housing person said that most of them from the Bandra branch. And there are around 400 crores or something was from the Bandra branch. ED person said, it seems okay, we will not wait any longer. Right now, let's go and visit the branch. The Diwan Housing person said, you can go, but there's a small problem. What is the problem? Even the branch is fictitious, he said. How can you visit a fictitious branch? We have got a branch in Bombay, in Bandra, but it is not the branch wherein the fictitious loans were this thing here. That was the moment NFRA decided that we take this up and ask all the audit firms, including the branch auditors. They took the name of all the branch auditors and have taken all this, whatever is seen here is taken against them. Most of the action against the audit firms of Diwan Housing, the branch auditors, please remember, the branch auditors, has been on tune saying that their appointment was not proper. Appointment was given by somebody called as authorized signatory. Name was not there, resolution was not passed. Who is the authorized signatory, we do not know. We do not know who the authorized signatory. So they said that it was, what was the validity of your appointment? Did the Diwan Housing really appoint you, or was it passed in through a letter? So some letter was given and the auditor accepted the appointment. Now see, one of the things we'll have to be careful of is, suppose NFRA does call you, what response do you give? I think we've got enough of matter now in the NFRA reports to see what response not to give. So this person said that I was not appointed as statutory auditor. Who said we were appointed as statutory auditor? Please look at the thing. They have given some formats, asked me to sign. It's a certification work, he said. It is not at all statutory auditor work, he said. But NFRA is saying, look at it, you are saying statutory auditor's report. Your appointment order is not correct, and you are giving statutory auditor's report. You are giving tax audit report also. So your appointment itself is in question there. So this is where I think we have to be a little bit worried about NFRA. Look at the last bullet point here. They have given specific instructions which paragraph number of the essay has not been followed. The paragraph number of the essay, standard auditing, has not been followed. They said 210 has not been followed, 200 has not been followed here. What is the overall object of the audit? That has not been followed.
Sir, regard to appointment of branch auditors.
Yes, sir.
Not only many companies, not only DHFL or whatever happened, many of the corporates, large corporates also, where they have got branches. Branch auditors appointment was not done by in our annual general meeting from the shareholders, as required by section 4, Companies Act. Old Act only they continue to follow also. So what is the status? Because now they are, NFRA has attacked on this branch auditors.
Only on this.
You are not ensured that whether your appointment is appropriate or not, as per the statute.
Correct, sir.
So this is one area which you have to see, because once an appointment is made, once you receive as a statutory auditor or anything, whether your appointment is proper or not, that is the first duty we have to see.
And I think you will have to insist on the appointment. I think that is what is becoming important now. You have to insist on the appointment here because, see, again, as I said, the question of familiarity comes in here. Familiar client, he has given us appointment letter, whatever he has given us, we have done this for the past so many years. But I don't think any of these auditors will actually know that it will come to this situation here. he has said that even though I was given only this job as certification or whatever it may be, NFRA is saying that you forget about Companies Act. Look at your essay. What was your appointment under? Have you taken that? Don't worry about Companies Act, don't worry about RBI, don't worry about Banking Regulation Act. You take your essay. Have you followed it? I am worried about essay and the auditor. He is not worried about Companies Act. You have not followed the essay. And on top of it, they are talking about professional judgment, documenting objective scope of audit, essay 200, essay 210, both were there. Planning the audit, overall objective of the audit, both the essays were not followed is what he is trying to say. I will tell you a little bit as a post-mortem, I think it's okay to find all these mistakes. I was just speaking to Manoj Gupta sir before this meeting also, and he also was saying that, see, when you look at the audits done in the past, if you want to find a mistake, you will definitely find a mistake. None of it has been done intentionally, please remember that. If you do a mistake intentionally, it becomes a fraud, there is no doubt about it. It may be harmless mistakes. If you want us to find a mistake, you can tell. I mean, as a post-mortem, definitely yes, a lot of these things can be done. But I think the message which NFRA is trying to send across is that whatever has happened in the past is okay. We are giving you these orders so at least in the future, you take the necessary care to ensure that, see, overall objective behind this is that whether you are the branch auditor, whether it is a statutory auditor or Diwan housing also, whether you could have actually signed the balance sheet is a question which has not been specifically answered or asked by NFRA, but they are only going with a simple objective of saying that you had auditing standards, it was a duty to follow them, you have not followed them. And please look at what they have said here, talking about, they have looked at the audit file. Now here again, for all members present and also people who will probably look at this later on also, I spoke earlier about defining the audit. If there is any auditing standard which you all have to follow from start to finish, without exception, SA 230 documentation, audit documentation. Whether it is QRB, whether it is FRRB, whether it is SEBI, RBI, whoever it may be, the only thing we can protect ourselves is going to be your documentation. There is nothing else which is going to protect us. Whatever audit documentation you have got, see, SA 230 gives you a time limit after audit, say 90 days you can build the audit documentation, but we know how that works. Once the audit is over, documentation is forgotten. Whatever you do, probably on the day of audit completion is what documentation you have got. It's not going to happen. And we know very well what is going to happen. 3 months later, you go to the client and ask him, sir, audit documentation, he will say, sir, next year, sir, probably. Bandila NFRA, bandila, that's a possibility. They will also say this.
Point.
Sir.
The post-audit, by the time they are given, if you see the actual wordings, compilation of the documentation.
Assembling of audit phase. Assembling of
Not
audit.
at creation of documentation.
Correct. Very good. That's a good point. Very good point. Not creation of documentation, compilation. The evidence should be there. You only have to assemble it or compile it. You can't ask for fresh evidence. There have been many reports of NFRA wherein they have charged auditors with tampering the audit file. I mean, they are given statistics also, saying that you had 186 Excel sheets. Now when they ask you to give 145 Excel sheets are tampered with. But I am going to let all those things pass because as a reaction we may do so many things. Again, not intentionally. We may do so many things because NFRA has asked for that particular information. But I think the underlying message to all of us is definitely going to be big audit, small audit, non-audit, neighbor is the auditor, whatever, auditing, whatever it may be. Don't compromise on documentation. You will have to focus on this because all the other essays, as I said, I am assuming that they have been followed in letter and spirit, but anything which can probably save us is going to be documentation. Now, NFRA has looked at the audit file of all these branch auditors and a very common list of mistakes they have given. Understanding of the branch operations, internal controls and responsibilities. Audit planning is not there. SA 300 not followed. Materiality has not been referred to. Understanding of IT systems controls is not there. 315. Risk, 315 is talking about audit risks. And 320 is about response to those risks. That also is not there. Trial balance for the previous year. It's a long time since I've gone for a branch audit, but I do not know how many branch audits we actually take trial balance for the previous year. They've said that yes, you don't have trial balance for the previous year. Again, I can tell you all that. NFRA went with an intention saying that this audit was not, appointment was not in order, first of all. You have done the audit, you issued the report. These are all the defects which you have got in your audit file. Summary of accounting policies, observations and previous audit reports, inspection reports, internal audit reports. If you look at this particular order of the branch auditors, you will get the impression the auditor has done nothing. Accepted the appointment, gone to audit, taken the fees and come back.
Might have not gone for auditing.
Possible. Very much possible. Very much possible. Extremely possible, sir. That's the impression we get. Now, unfortunately, what is not in the order is what is there in the audit file. He is only saying what is not there in the audit file. He has not told me what is there in the audit file. If I wanted to pass a judgment whether a firm has actually built up documentation or not, I would want to know what is there and then tell me what is not there. I do not know whether NFRA has given this information to the auditor in question or not, but you can, and I'm quite sure all of you will agree with me when I say this. Any of you can take this up. You take last year's audit file. There were now a little bit, I think, free season is there. Tax audits are over. You take any audit file of last year. Give it to some third person. Ask him to find mistakes. Just tell him, find mistakes. You will be surprised how many mistakes he finds out. There will be plenty of mistakes because that's his intention, that's his objective, that's his task. Lot of mistakes will come out. But here again, because of the nature of this particular investigation, they also said that verify loan sanction during the year not been done. KYC verification, anti-money, nothing has been done.
Not even aware.
As he said, probably auditor said, you didn't go at all. You took the letter, gave the audit report. That information, I am not privy to, so I can't talk about that particular situation. Okay, this is all fine, okay, no problem. Now, again, as I was talking to you a little bit earlier, this is what NFRA has come up with. They have listed the auditing standard, listed the paragraph number, listed the observation, and said that you did not have audit plan. Okay, very good. No risk assessment. Very good. No response, obviously response also is not there for risk assessment, right? Materiality has not been done. Design performance of analytical procedure has not been done. Sample design, sample size has not been done. Written representation is not there. Everything is written there. I put a bullet point to the right hand side asking, many of you would have probably done branch audits. How many of these would actually apply to branch audits? If you ask me if it applies, I say yes, it applies. Because it's an auditing standard. How long do we take for a branch audit?
3 days.
3 days. 3 days, 1.5 days goes only on NPA. NPA negotiations take 1.5 days. I say negotiation because that's what it works out to, right? You provide this much, now I provide this much, whatever, that takes 1.5 days. Remaining 1.5 days, you have to do all these paragraph numbers. Will you do it? This is a problem we have to face now. Because what happened to, let's not forget the fact that what happened to Diwan housing, touch wood should not happen to the branch audits you are doing. But in case it does, you will have to ensure that your audit file has got this necessary, at least for the purposes of documentation, please ensure that all these auditing standards are mentioned and you have that on record also. Because otherwise it becomes very difficult to this thing here. Who are these orders sent to? NFRA orders are sent to MCA, SEBI, RBI, ICA of course, sent to the company, IT team of NFRA for loading on the website. Every regulator in the country gets a copy of the NFRA order. It's obviously on the NFRA website also. So they are all aware that, okay, to this particular audit firm, this is what has happened. Can we appeal against orders of NFRA? There is a small provision in section 12 of NFRA rules, rule 12 says that appeal will be to appellate tribunal. Where is appellate tribunal? Not yet set up. So appellate tribunal is not yet set up. Right now, the only recourse for us is to go to the courts, to go to the High Court. That's the only recourse left to us. There's a company called Brightcom in Hyderabad. Auditor of Brightcom was targeted, or orders were issued by SEBI. This is basically a company is doing wireless internet. They got into sort of problems, again related party transactions, all sorts of things happened. SEBI has passed an extremely adverse order against them and banning him from practice, whatever it is. They said this action has not happened, that has not happened, all these things have been passed there. Now this auditor of this Brightcom, NFRA has not taken it up still. He's still not gone to NFRA. He got a bit worried. He said that if SEBI only has given such adverse order, suppose NFRA comes to know. So what, he went to Telangana High Court. He went to Telangana High Court and said that NFRA cannot investigate any audits prior to their formation. This audit is for 2017, 18, 18, 19. He said NFRA should not investigate prior to 2019, 2020 when they were established. Telangana High Court said yes, they cannot investigate. It is right now gone to the Supreme Court. Chairman of NFRA is saying we have got powers to investigate, but this Telangana High Court has ruled saying that you cannot investigate audits done prior to your formation, because when you were not formed, how can you do audits? How can you take audits which are prior to the setup? But this is still a little bit dicey here. If you ask me, they'll amend the NFRA rules. They'll amend the NFRA rules and make it retrospective. So this auditor of this particular company called Brightcom, I do not think he's going to escape here. But he has got a temporary reprieve from the Telangana High Court. We'll have to see what the Supreme Court says. I'm quite sure it will be set. Otherwise, you've got only recourse to go is to the High Court. There's no other option but to go to the High Court. I don't want to talk to you much about ILFS because it's an old story by now. But a few of the wordings issued in the NFRA order are cause for concern. They said partners had direct access to the top management. So NFRA is saying that, what is the meaning of this word called access to top management? Again, independence, all those things will come into play. See, ILFS, though I said it's an old story, we should not be repeating old stories now. Lot of, information is out there, ILFS, what has happened. But if you actually look at the ILFS story, it's a very interesting situation. There are about 239 or 240 subsidiary companies. That also is not, nobody knew how many subsidiaries are there. 240 is what we came to know. But later on, as the data started coming in, because it's not a listed company, we did not have too much of public information. So SEBI did not have information, BSE and NSE did not have information. We only got it from those reports which were given by the investigating agencies. They found that 60% of the losses of the consolidated losses of ILFS, 60%, were only from 4 companies out of 240. 60% of the losses were only from 4 companies. There was a company called as Gujarat Pipa Port. 20% of consolidated losses only from this particular company, Gujarat Pipa Port. And very interestingly, the branch auditor of Gujarat Pipa Port had qualified going concern. The branch auditor had qualified a going concern. Similarly, one project in Tirupur, which also had heavy losses, that auditor also had qualified. So the question with investigating ask the consolidating auditor is that, you consolidate financials, you consolidate everything. Why don't you consolidate audit reports also? Had you seen those two going concern objections, you would have probably mentioned going concern in your audit report also. Because the losses were so huge, you could have probably given a consolidation audit report saying going concern is a question here also. No response from the auditor. But then later on, as we will see, NFRA has taken out a lot of information and said that dependence of the auditors on ILFS for fees was so huge that independence was compromised. Before I think I was already seen this, but anyway. India's conversion, how much do you think we should charge? Don't talk about 2023 now, talk about 2017 now. India's conversion, how much you should charge? Company like ILFS, you take 240 subsidiary companies, whatever it is. 44 lakhs. Maybe justified. But look at the sixth point. Integrity, due diligence on the target companies and key principle. Nobody knows what that means. 37 lakhs for that. If at all you want to confuse your client by invoicing him, please use these words. Nobody knows what this means. Integrity, due diligence, what else? ICDS consultation, 20 lakhs fees. I don't think insurance, even income tax department has not spent 20 lakhs in prescribing the ICDS again. Consultation, they have taken 20 lakhs of rupees. Very clearly here, there was a lot of other things also which happened, we will not get into that, but NFRA was very clear saying that if your dependence on non-audit fees is going to be so high, there is no question of independence has been compromised. No auditor did not qualify going concern. When branch auditors have been qualifying going concern, you did not qualify. You did not qualify because your independence has been compromised, because you have taken or you're depending on so much of non-audit services fees. Okay, but I'll tell you one more thing about this ILFS thing, just to wind up this ILFS argument here. There was a rating agency, this again also out there in public domain. India Credit Ratings over there. The chairman of that rating agency, or the CEO, he had a fascination to see football matches of the Champions League in Europe. Real Madrid, Barcelona, all those teams. So the ILFS people happen to know somebody who can give tickets to these Champions League matches. So the rating agency person called up ILFS and said that there's a match happening in Frankfurt or Paris, wherever it is. Can you get me tickets for this match? ILFS said, yeah, I'll get you tickets and whatever you want we'll do for you, don't worry. Tickets were organized. So this whoever the person is, rating person, he went, saw the match, came back to Bombay on a Sunday. Monday he had to issue a new report on the credit rating of ILFS. Sunday night he comes back, Monday he has to give a fresh rating. Exactly at that point in time, there was a threat that ILFS will default on their first repayment of their loan. He maintained the rating. He maintained the rating because, obviously, what is the back of his mind? The trip to Europe. Not the default of the bond which is going to come up. That was obviously the back of his mind. So many such things happened. For the auditors, they said that independence is definitely definitely a problem for you all, because non-audit services, the dependence has been extremely high. It is something which we have to sort of also keep at the back of mind. One more company called Bartronics. These are all small companies, again applicable to us because we may have some clients who are similar in size, similar nature, listed company and all those things. Failure to maintain audit file and cooperate with NFRA. This auditor, what he said was, NFRA first called him. He said, I've got too many tax audits, I'm very busy. First he said statutory, he said July returns, I think he said tax audit returns. I'm very, very busy. Poor NFRA was waiting. They said, okay, TK, whenever you finish your audits, you come, no problem. So they sent him one more notice in October and said that now all tax audits are over. No, can you come? No, transfer pricing. Have you TP returns? Okay, November, December happened. After some time, I think they just ran out of excuses. They gave him a final notice in the month of January or February. He did not turn up. They said nothing doing. Your purpose is not coming to NFRA. So what they did was they said we are going by what we have got. You have not come. You have not told us your stance. We don't know what you are going to say because you never appeared to us. Non-cooperation of NFRA is a problem. Misuse of emphasis of matter for issuing a modified audit opinion. Now here I think we need to be a little bit careful because at least in 4 or 5 orders, NFRA has said that you should not have used EOM, you should have actually qualified the auditor. I'm not saying that substance in what NFRA is saying, there could be substance in what NFRA is saying, but if you look at 706, SA 706 says that emphasis of matter is something which has been disclosed in the financial statements. Auditor is only trying to draw attention to it. A disclosure is already there. It is not a wrong accounting policy. It's not a violation of accounting policy. It's not a non-disclosure. If it's a violation of accounting policy, not a disclosure, straight away it has to be a qualified report only or adverse opinion has to be given here. But what they are saying here is that you have given many emphasis of matters on topics, on matters which actually should have been an adverse opinion. This is something we need to be a little bit careful about because if you look at the audit report now, you've got key audit matters. Key audit matters, we are talking about what are the risks we face in the audit and how we have handled those risks. We've got EOMs. EOMs are things which have been disclosed but you want to draw attention to. Key audit matters invariably could be, say for example, judgments in revenue recognition, IT controls, all those things. Estimates and judgments normally will be a part of your key audit matters. Disclosure could be a litigation, a major litigation which has happened, which could cause some provision to be made. That could be a part of your EOA. If it is not any of these things, at least what NFRA is saying that it should be an adverse opinion. It has to be an adverse opinion. In effect, what they are trying to say is that do not use emphasis of matter paragraph as a parking ground to point out what should have been, to avoid what should have been a adverse opinion. Now you can ask me a question saying that, how do I distinguish between these two? What is the line I have to draw between saying that I have to qualify the audit report or adverse opinion or show it in my EOM paragraph or for that matter also even your key audit matter paragraphs? I don't need to worry about EOM because the focus seems to be more on EOM, not on key audit matters. Even if you don't have a key audit matter, it does not matter. But if you are overemphasizing on EOMs, then there is a problem. There was one recent thing which came up 2 days back in the audit. Accounting policy says that inventory valuation is at estimated market price. Inventory valuation is at estimated market price. Now whether estimated market price is equal to NRV, we do not know. That we do not know. For all practical purposes, maybe it's equal to NRV. How do we know? We do not know about that. Auditor, what he has done, he has said that AS2 says NRV, but you are saying it is estimated market price. It's a non-compliance with AS2 or Ind AS 2. NFRA is saying that if it is non-compliance accounting standard, adverse opinion. In Ind AS 1 you are giving very clearly all accounting standards have been followed. Should be an adverse opinion. You can see how deeply they are looking at all these things and saying that don't use the EOM paragraph as a parking ground to protect an adverse opinion which has to be given there. if you ask me what the difference is going to be, the difference is going to be what the client has disclosed or not, what authority has disclosed or not. If he has not disclosed it, there is no question at all, it has to probably go as a adverse opinion. If he has disclosed it but not quantified it, maybe it can probably be an UM paragraph. So I think that distinction is something we have to make very clearly, because I have seen at least 4 or 5 reports in which they are saying that you should not use the EUM paragraph, it should have been an adverse opinion. Again here, we will probably have to go back and think very strictly that can we really give an adverse opinion for all our clients? I think there is a particular line beyond which we should not probably cross. As far as the line is not crossed, I'll just leave it at that. We should not worry too much about those things. Okay. They also start looking at accounting issues now. Waiver of principal amount of 9.74 crores. Should it go to pay and account or to reserves? What does AS5 say? I think here in this particular case, the directors are adjusted in reserves, I think. They have said that you should have probably routed it to the P&L account, not gone to reserves. So you see, what is happening here is that not only are we looking at situations wherein obviously 9.7 crores was extremely significant for this particular company, that's why it was picked up during the investigation. Any write back, unless specifically permitted by an accounting standard, would have to be routed through the P&L account. I think that is very, very clear both in AS as well as in NDS. Okay, I'm going to put all of you on the spot here and ask you a question. These are the numbers which are there in front of you all. Assuming it is a new client of yours, I want you all to tell me whether you feel this is a going concern or a gone concern. I'll tell you the numbers. Net loss is 12.67 crores. Accumulated loss is 115 crores. Net worth is negative 13 crores. Working capital is negative 241 crores. Total debt is 83.19% of total assets. Debt payment defaults have happened of 234.15 crores. You will probably ask me a question, why is it even continuing as a company now? Multiple organ failure types. If this is your client, would you use going concern and qualify audit report or not?
What if there is a support letter from the holding company and the holding company has ability to pay?
I'm fine. I'm okay. I'm just asking you a question.
I'm just saying some of these things may be looked in isolation by NFRA. Like you said, they are not looking at what is in the file, rather only picking the
What is not
side of
there?
the story.
Yeah. So he is saying that I have got a comforter letter from a holding company. Everything will vanish here.
So disclose it.
Disclose that we got a letter of comfort. That's what he is saying. Right? So if you look at this from the point of view of an investigator, please remember this. If I tell you, please look at this from the point of view of an investigator. You would say not going concern. Please qualify the auditor. If you look at this from the point of view of a management consultant and say, how can I improve this balance sheet? What will you say? You would say, get comfort from holding company, disclose it properly, ask for waiver of researching of the proposals now, get a PLI scheme approval. There are so many options available. I can restructure the company in such a manner that all these things go away. The concept of going concern, please remember, is a matter for judgment. This company, Biotronics, and see, going concern is not only a question of only numbers. There are many other factors which actually also go and get into the concept of, do you have a future business plan? Are there any assets of the company? Many things will happen for a going concern. So, I would say that it depends upon how that particular entity at that point in time, what are the circumstances which have happened in that particular entity for it to say I am going to be a going concern. But if you are the auditor of this company and you have these numbers in front of you, what I will want you all to do is, even if you are saying it is a going concern, please justify why you are saying it's a going concern. Don't allow this balance sheet to pass without having a document in the audit file which says that even though all these factors are there, you have taken this into consideration to decide this is a going concern or not a going concern, as the case may be. As I said earlier also, this is going to be a very important part of your this thing. Okay. Again, we can keep on talking about this. Preconditions of audit, all these things, integrity of principal owners, key managers, entity, competence of engagement team to perform auditing, time and resources. Anyway, I am not going to talk about it because, as I said, if you want to find out a defect, you will keep on finding a lot of defects. But what is of concern here is that they have also spoken about integrity of the principal owners, key manual entity. They are assuming that integrity is there. Now, for I say, no, look at that also. See if they are integrated people or not, people with integrity or not. Okay, now, if you look at the latest audit which has come a few days back, again a listed company, logistics company if I am not wrong. Unilateral write back of liabilities, what NFRA is saying. Inventory values are about 50% of current assets. 44% of IPO proceeds were paid to one single related party. Now, I don't know who the related party is, but these are obviously items of, these are all easy picking fruits on NFRA. 100 crores ITP of 44 crores, you paid to one related party. Obviously, you know what something is fishy there, right? But as I said earlier, and I will repeat this, I can keep on repeating it only for the purpose of driving home the message that related party transactions are not banned. They have to be at arm's length and appropriately disclosed. If at all there can be a problem, it can be with related parties. I need not tell you of this, many of you probably be knowing this. 25th of March when the lockdown was announced by this COVID pandemic, the entire country, as all of you know, shut down. Though banks were working, they were not functioning. They are not functioning means they are not disbursing loans at all. Many private companies had problems in funding because they did not have access to the bank, they could not operate the bank accounts, they had issues there. What do? They took money from related parties. Say that once pandemic is over, I return it back. Money was taken, pandemic also became over. That money was neither not repaid nor was it documented. But it is low. Now we are realizing, oh, then they gave it. Oh, what we should do now? We should repay. No, there is no money to repay. So what do we do for this? See, related party, the biggest risk is convenience. The biggest risk in related party transactions is convenience. I can simply take money from them, I can do whatever I want only because of convenience. Just because they are related party to us. So that is one thing where I think we have to be a little bit careful about. Inventory valuation, again, key audit matter instead of adverse opinion. Okay, now I tell you about this very, very interesting case. Please bear with me for this. One person company. This happened in 2018-19, correct? 18-19. Total of 7 transactions. Including 1 purchase transaction and 1 sale transaction. How will I do the audit? Startup company. I also say that, startup company. How will I do the audit? 100% audit. You can do 200% also. No problem. Get 7 transactions, get the bank account. You can keep on doing the audit for many, many times. This Pune-based firm did exactly that. This is a CA firm based in Pune. This was a NASDAQ listed or a proposed to be listed on NASDAQ startup company, 1% company. They were the auditors of the subsidiary company in Pune. Head office was in US. It became a PCOB investigation. it became a PCOB investigation, and this is exactly what the audit firm in Pune said. There are, sir, 7 transactions, 1 purchase, 1 sale, both to different parties. Bank account is there, bank account is very good. See, US is now very scared of bank account because of Satyam. They are very scared of bank accounts now. After Satyam has happened, they are very, finicky about bank accounts. I'll tell you about that a little bit in some time. But how will I do this audit here? This is what you will do, right? PCOB investigated audit firm in Pune. I told them, okay, how many transactions? So 7 transactions. You have bank confirmation? Bank confirmation is there, sir. Okay, you issued audit report? Audit report is there, sir. Everything is there? Everything is there. Where is the audit plan? Yes. This is 7 transactions. What audit plan, sir? Where is the representation letter? Sir, 7 transactions. Why, sir? No MRL, no audit plan. PCOB has actually banned this firm, saying that there is no audit plan, there is no MRL. Now, whenever PCOB gives a report, you are supposed to respond to that report also. This firm in Pune has been very decent. They said that we accepted the suggestion, in future we will have audit plan also, don't worry about this. But can you believe that for this sort of an audit, this sort of a order has been passed by the Public Company Accounting Oversight Board? So talking about bank accounts, I'll tell you why this is important. US company, listed on Nasdaq, called Toys R Us, Chinese company. Chinese company means always some problem will be there, especially listed in the US. Now for the last about 10 or 15 years, they had this habit of getting bank confirmations by post. Auditors will send the bank confirmation, they'll say please report directly to the auditors. Big 4 firm of auditors, the bank confirmation used to come. Satyam happened. Satyam happened, the big 4 partners called up this company and said that now we have to be very careful now. No more post audit this thing, bank confirmation. I am going to the bank myself, he said. The CFO said, sir, why you are partner, where do you have to go, sir? Send somebody else. No, I am going to go, he said. CFO just asked, when are you going to go? Tomorrow morning I am going to go to the branch. Okay, no problem. 8:30 in the morning, Nasdaq opens. Announcement from the company, auditors have been changed. Overnight. My partner was shocked. He said, what is happening here? He called up the CFO, then we invited, no missed call. India only gets the idea of missed call. You don't want to speak to somebody, missed call only. The CFO never took the phone. This man was extremely worried. He went to the bank. He said, I'll go find out myself what is happening. So he went to the branch and told them that I am auditor. I was auditor. Till 2 hours back I was auditor. But I want to find out what has happened. All this time you've been giving confirmation of balance. So this is the account number. Can you give confirmation of balance? Though you can't give it to me for the current year, at least for the past years can you give a confirmation of balance? Branch manager said, sir, very good sir. Now that you have come, very, very nice sir. I can give you confirmation for all the 15 years provided I have a bank account. There is no bank account here, please. And there is no bank account reservation of confirmations. So very finicky about bank accounts. But look at what they have done here. They have gone and said that for this, it is not only OPC, it is also SPC, small person company. They have said that have audit plan. What is the message we get? However small the company, give them a piece of paper, call it audit plan. That's all I am saying. That's what you should do, because I told you the focus is only on documentation. You should tell them that this is what it is. Since I know this person very well, I called him up and told him that I've seen this audit, don't feel bad, I'm asking you this question. He said it was terrible, he said. It was very terrible to face them because, but he also told me we seem to be taking some things for granted, sir, which we should not, he said. Maybe the same company becomes a bigger company and probably do the same thing. See, that seems to be the message of the PSA, but he says it's very, very difficult to face them because they just do not listen at all. Sometimes, being Indian person helps there. I remember this long time back, PCOB, I think 2010-11, I told you those initial periods, when they were focusing only on documentation. One US company, audit firm, confirmation of balance not from bank, trade receivable, confirmation of balance is received. It is there in the audit file. PCOP investigation. Confirmation of balance is there. What mistake will you find out? Confirmation of balance is there. What else kind of mistake can you find out? They had to find the mistake. They said, okay, confirmation of balance is there. Covering letter is not there. How do I know you sent it or not? The poor person partner was shocked. He said, "Idella take karo." Then they said, yeah, covering letter is not there. You please find out. Luckily there was an Indian chartered accountant in the audit firm. He asked the partner, sir, what is the problem? He said, covering letter. That's all. And you don't research. What do you want, sir? Covering letter for the trade receivables. Which date you want, sir? You see how many innovative questions come up now. So he prepared one covering letter, ensured that it looked as old as possible, put it in one more file, and called the PCOP and told them that we found the letter. They came, we found the letter. Where was it? One more file, sir. Some small filing problem in our office. Accepted, no problem at all. That's why I'm saying, if you want to find a mistake, there will be plenty of reasons to find. We have to do this only. There's no other way we can do this, right? That's the only thing we can probably think of doing. Okay. NFRA seems to be telling us that if you have got reason to believe that the fraud is there, do not hesitate. Please report it. One form also is there, ADT form is there. Central government, please report. If you have got reason to believe that a fraud may have occurred in the company, this really puts the auditor in a very, very problematic position, because on the one hand side, he has to look at this fraud, on the second hand side, he has to look at his fees. This balancing rope becomes a little bit problematic to understand. Though they have not used the word called detecting the fraud. They have never used the word called detecting a fraud. They have said that reason to believe. They have also said that if the fraud has been reported by somebody else also, or detected by somebody else also, you still have to report it to the central government. You cannot absolve your responsibility just because saying somebody else detected the fraud.
So what is fraud here?
Like sir, this.
No, generally fraud, what is fraud? See, generally somebody in the morning, during breakfast, raised a question. There was a GST raid was there. In intelligence people they came, they found that ineligible input rate has been taken. Once it was pointed out to the businessman, immediately he reversed that rate. So I am the statutory auditor of the country. So should I consider this as a fraud and report?
Okay. There are so many numbers there. I'll allow them to answer first.
It's not a fraud.
Not a fraud, okay. When many members say it's not a fraud.
Another thing, common, generally it is applicable to all. Now in the CARO it has come that where you are given sanctioned with the limits of 5 crores and above against security of current assets. It is your obligation to say whether quarterly returns furnished to the bank are matching with the books of accounts or stock records and others. It is universal open issue which has come right from small company to large companies. This information that quarterly monthly returns furnished to the bank will never match with the books of accounts. That is the open fact. Everybody, even a cash rich company, they keep only just limits, 500 plus limit they wanted to have a comfort level. They don't bother because okay, I'm not using out of 500 plus, hardly I use the limits. So to the extent of whatever I like, I just furnish. That is that kind of situation. Other kind of people is there, okay, I'm just making time to play with the DP power and just furnishing. Is it not a fraud?
It is a fraud.
And how many people are reporting?
Okay. Sir, I think Manavlutha sir, I think, as I said, there is a line. That line should not be crossed. I mean, I'll give you an example. I'll just give an example. It happened to, again, CA friend only, the auditor of a company in Bhopal. This company, they had this habit of the sales were being overstated. Especially it was listed company incidentally. Especially every quarter sales were being listed. They were being overstated. So he tried telling them that aap kaise nahi kar sakte, this is a problem and all those things, and the company seemed to be saying that I'm paying fees, no, just do whatever it does, it's not very different, it's not very material. I think he was talking about some 6 crores or 7 crores was the average, and he was doing it only for the purpose of bank, there's no doubt about it. He was doing it only for the purpose of bank because he had some limits to protect his bank. This person waited for 2 quarters, 3 quarters, and then I think he started getting worried, saying that the quantum was increasing. It's obvious, no sir, it's obvious that the quantum was increasing because 6 crores became some 10 crores, 10 crores became some 12 crores. And thankfully every quarter he kept at least telling me what is happening. I think in 2020 quarter, December, I think, if I'm not wrong, he said, now enough is enough, sir, I've got this thing here, so I've told the company that, this was December quarter, I've told them that if you don't reverse it, I'll put it in my March audit report. He has actually informed them about it, saying that if you don't reverse this, whatever the sales are there, I'll have to put it in my March audit report. I don't want to, in case you want to appoint another auditor, I think he has told him in as many terms, it was the audit committee. Audit committee chairman was a chartered accountant. When he told him this, he came to know and he said, okay, what all has happened and all those things he covered, and he ensured that it was reversed for that particular March quarter. Now the question came was that whatever 6 crores was an overstatement. Was it a fraud? Definitely yes. But this man put a tolerance limit and says, I won't go beyond this tolerance limit. I think that is where I think we'll have to look at this tolerance band and ensure that the tolerance band is not crossed. Then, sir, I've told this, you will have heard me telling this in the past also, but let me repeat this. Many people don't like my saying this, but it's a fact. As long as the client is paying our audit fees, we cannot be 100% independent. We'll have to accept this as a fact. We'll have to accept this as a fact. That's why I'm saying don't cross that line. There's a line between this independence and the fees also, right? Let's not ensure that the line is not crossed. There will be situations wherein your independence will be tested because the line has to be crossed. That is where, in US they started this thing, they said that very good point, client should not pay audit fees. So they said we form one fund. The PCOB will start with this idea. We start one fund wherein all the listed companies will put all the audit fees into that fund. Correct? And the fund will pay the audit fees. It's a brilliant idea. Independence completely will be taken care of. Because client is not paying the audit fees. The fund is paying the audit fees. They thought it was a brilliant idea. They started it. They took from 200 companies, they took the audit fees. Now, the fund had some very big office somewhere in Washington and all. They said, who will bear the expenses of this office? They asked the companies to contribute. Companies said, see, I'll contribute for fees, not for expenses. What do you want? Fees? No, I'll contribute for the fees. Over coffee, tea and all those things, I'm not going to contribute. Do whatever you want. 1 month they took, 2 months they took fees, they had to return the fees. It never worked out as a concept. That's a fact, we have to face it. But I think, sir, to answer your question, that line is very, very important for us to ensure that this is not there, right? See what NFRA is saying. Mandatory obligation to report fraud or suspected fraud if they observe suspicious activities, transactions or operating circumstances in a company that indicate reasons to believe the offensive fraud is being or being committed against the company by its officers or employees. 884 has to be done, 143.12. Resignation does not absolve the auditor of his responsibility. Many firms have resigned saying that line has been crossed, I will resign. NFRA is saying you resign, but still fraud has happened. You cannot be held not guilty for a thing which has happened in the past. That's what they are trying to investigate. Okay. Now, enough has been said about NFRA here. All I want to say is that NFRA is going to be here to stay. It's not going to go anywhere else. QRB and PRB, as I said, they will invariably follow the NFRA process. Private limited companies, large companies, you may have this situation wherein more questions are being asked. Now, we had a QRP in our office, and for a client, trust me, the questionnaire is so comprehensive, it's so detailed. Manoj sir can also vouch for this. It covers many aspects of the audit, there is no doubt about it. But the person was telling me that, there's so much I have to spend only on documentation myself. When we actually do the QR review itself is, a big thing. So it took about 1 week. I think it's a very good thing that both this FRRB and this review boards of the institute are really going to help us, because at least in the near future, at least I can tell you all that they may not transgress their limits and come to smaller companies unless the offense has been really, really serious, or it's in public domain, or some major fraud has happened, or some bank has been, devolved of its thing, whatever it is. But these institutions, these bodies, they will start becoming a little bit more detailed. When I say that, I also say that we also will have to become a little bit more detailed. AQMM will start going to become a benchmark in the future for us. AQMM is already there from the 1st of April. It's already there for listed companies. Many people are still saying that AQMM, there are too many questions there which we cannot answer. I think we should start. See, AQMM is a process, it's not an examination result. It will take time for the AQMM to establish. You've got to have your AQMM score, it will go to come in your peer review certificate from next year onwards. So, I think what we need to do is slowly start building up that particular AQMM, because that is going to be the benchmark on which audit firms are going to be assessed sometime in the future. Therefore, whatever I try to tell you about NFRA, most of it has already been covered in the AQMM. Especially on IT controls, AQMM has got a very detailed questionnaire. For example, human resources, many people say that human resources, what is human resources in a CA firm? Human resources only are article clerks. We don't have any other human resources. So you may pass those questions or answer them to the extent which is possible, but don't ignore those particular questions, because that is what is going to happen. Now the question is going to be that, how are we going to defend the audit? Let me pause here and tell you all that I am not saying NFRA is going to come to your office. I am not saying QRB is going to come to your office. I am not saying any of the regulators are going to come to your office. But we are talking about a situation, suppose they come. What do you have? What do you have to show them? In case they come, what is your audit file going to contain? What will your audit file show them? How will you define audit saying that? And please remember that most of these people are coming after 3 or 4 years. It is not instantaneous. You will probably get it in 2026 now. Audit done in 31st March 2023, you will probably get these people in 2026. Where is your audit file going to be? Is it there in the first place? So these questions become very critical to answer. The only 2 ways I can think of is that extensively document. I've already spoken about this word called documentation quite a bit in the past, so I will repeat it, and also saying that correspondence. Documentation and correspondence are going to be your saviors, shall I say. And please don't look upon this as when I'm saying defending, I'm not saying this is a war. I'm only saying that we are trying to ensure that in case the eventuality happens, do you have adequate resources in your file, adequate documentation in your file to say that this is what has been done. Interestingly, what the ICA also says is that, suppose you have completed an audit in the, let us say, March audit has been done now, and let us say you give the audit file to me. I am no way concerned with your firm. I'm a complete outsider. You give me the audit file. By looking at the audit file, I am supposed to know what are the procedures you've employed, how much of audit has been done, what document has been collected. Compliance with all these essays. And of course, Ind AS or AS, whatever it may be. I am supposed to know. The documentation standard itself says that you should have this much of material that an independent person who has not done the audit is able to know how much has been done in the audit just by looking at the audit file. As Manohar Gupta said, we have to assemble the audit file. All of us know this. July, August, September, peak season, audits will be happening, simultaneous audits will be happening. All the audit documentation will be in a single file. It will have multiple clients audit documentation also. How do you segregate it? How do you put it out? How do you segregate it? That becomes a very important part. Many people have also gone and said that, okay sir, so much you are talking about audit documentation. Do you have in your office one proper audit file? Can you show me one model file? Wherein I will take that audit file, not the contents. I will take the structural audit file and repeat it in my office so that I will ensure that at least the audit file has been kept to the extent possible. We do have in our office, not by 100%, but we do have it. But what I did was, I said, let's use technology for this again. Nowadays everybody is using technology. So I asked ChatGPT this question. I said, do you have a model audit file for chartered accountants to maintain their audit documentation? And surprisingly, ChatGPT came up with this. Not only this, even for individual components of this, it has given me what are the components of it. Engagement documentation, audit planning documentation, internal control evaluation, working papers, specialist reports, adjustments, and even we use the word called misstatement also. That also is permitted. Correct? Audit completion, communication reporting, archive correspondence and notes, post-audit documentation. This is enough on NFRA. You don't have to go beyond this end. So comprehensive, so detailed. I think this you all can, of course, this is there with the branch. You can obviously be there in the branch premise thing also. You can take this as a. These are the main chapters. Now immediately you are going to ask me now, sir, where is my Ind AS checklist? Where is my AS checklist? In which category will this fall in? Will go into documentation, will go into working papers, will go into what is called as engagement document, obviously not engagement documentation. Where will it go to? Where do I show this Ind AS checklist? Working papers, very good. If you ask me, it doesn't matter where it goes, it should be there, that's all. It doesn't matter which title or which section of it, it should be there, that's all I'm trying to say here. But I think what is, this is again something which I mention wherever I go. Please look at this audit completion. And I will request all of you all to see if this is possible in the audits which you all have done. See, because I told you, what happens now is that audits happen in a hurry, simultaneous audits are happening, we sign the audit reports, it's done, we move on to the next thing, and then, you know, we've got our CPR to take care of, we have to come for conferences, we have to go to Hampi also. So we have so many things to do. Once the audit report has been signed, UDIN has been generated. We feel audit completion documentation is UDIN. That's what many of us feel. Maybe too, I am not saying no. Provided all the remaining parts have happened before that also. You all can use this as a template to ensure that, say for example, sampling. How much of sampling has happened? Do you have all those invoices? Nowadays, of course, you got software also for this. But I want to focus all of you on one single thing which is called as audit completion. And I will tell you all about this particular document which is called as Summary of Audit Findings. What are the auditee responses? What is the conclusion and disposal? my request to all of you all will be that for any of the past audits done, 31st March 23, try to build up this one. It can be a single sheet of paper. Ask the audit clerk, what were the major findings of the audit? What will be the response? Nothing, sir. Everything is okay, sir. That means not audit, that means. There should have been something at least, right? What are the summary of the significant audit findings? What response has the auditee given? What response has the auditee given? And how you have disposed of? Please remember that all these three things become critical. What is most important from the point of view of the signing partner, engagement partner? NFRA keeps on saying EP. What is most important from the EP's point of view is, how has he disposed of? What conclusion have you reached? I'll just give you one more example. Though most of these examples don't come from India, there's a real estate company, there was a real estate company in the UK called as Carilion. 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 Real estate company. Till 2020, listed company, doing quite okay, but very clean audit report. Just like ILFS, they got into a cash flow problem. Within 1 year, applied for liquidation. 9 months, applied for liquidation. They were liquidated also. All the shareholders were extremely upset. They said, what is this here? Listed company was doing so well about 1 year back. Suddenly in 9 months it was collapsed. So what happened? Didn't anybody observe this? UK government formed the committee and all those things. The committee asked the auditor, it's there on YouTube also, you can find this conversation is there on YouTube also, though it's in a censored version, but it's there on YouTube. They asked the auditors, 12 years you've been the auditor of this company. 12 years. Not even in one audit report, have you said that there's a possibility this may be a going concern, not a going concern. Or there can be some problems in the audit. The auditor said that my report is on 31st March 2020. I do not know what happened after that. I cannot respond to cash flow issues and all those things. Today we have a column in Caro. We have a paragraph in Caro. It's come only because of Carilion and ILFS. What is the paragraph saying? According to ratio analysis, whatever, does the auditor believe that the company will have enough of money to pay the dues in the next 1 year? Auditors now become astrologers also. We should predict. ಏನಪ್ಪ ಕೊಡ್ತೇವೆ 1 ವರ್ಷದಲ್ಲಿ ವಾಪಸ್ಸು ಕೊಡ್ತೀವಿ ಸರ್ ಕೊಡಲಿಲ್ಲ ಅಂದ್ರೆ ಏನು ಮಾಡೋದು ಏನು ಮಾಡೋಕ್ಕಾಗಲ್ಲ. The UK regulator has mentioned this to the KPMG auditor saying that I will not trust you it's an extremely harsh statement but I should mention it here. I will not trust you to audit the contents of my fridge because after I receive your audit report I will not know what is inside my fridge this year. 9 months suddenly. There was also a third party evaluation of this Carilion case and they said that, they gave a very interesting response. They said that, you know what has happened here? They said that the auditor has audited the balance sheet and profit and loss account. He has never actually reviewed the cash flow statement. Had he reviewed the cash flow statement for the last so many years, he would have known that there is a problem in the cash flow in this company. Operating cash flows consistently negative. Increasing financing cash flows. Obviously disaster. Auditor has not seen the operating cash flows and cash flow statement properly, is what they have said. So what is important for us in this one document, please do it as I said for all the audits you have done or at least for the main audits you have done. How has it been concluded? Summary document, make it a practice to ensure that this one single piece of paper is kept on record, is there. First thing in the audit file should be that one. Because what it does is that not only are we saying that, okay, you know what, these are all which you have observed in the audit. See, checklists are fine. I don't have a problem with checklists as long as the checklists are updated. Right? But checklists will also have to be, frequently updated because regulations can change and all these things. The final disposal of that particular point becomes very important. Many of you must be doing branch audits. Why was NPA not provided for? Nowhere documented now. Advance has been given, inspection report has come, 20% provision has been made as per the prudential norms. Collateral is not there, borrower vanished. This is the situation. Bank is maintaining 20% only. You are suggesting additional provision, bank manager has convinced you for non-additional provision. How is it being documented? That I think becomes very, very important. Whatever it may, I'm not saying what it should be. All I'm saying is that conclusion, that finding should be very important. So please ensure that you can use this as a benchmark or a template for the purpose of, and ChatGPT has also got a lot of other things also. So as I said, what you do step one is, okay, this I didn't come to step one at all. So first thing itself, auditing standards say is that please assess what is the amount of risk you have got. Is this a very risky audit? If the answer is yes, what should you do? Probably pass it. You may say it's very easy for me to say because dependence is always going to be there. But as I'm saying, assess the degree of risk is what I'm saying. There is risk in every audit, we are sure about that now. Every audit is obviously risky, but how much is the degree of risk? Is it very, very substantial? In that case, I think you should be a little bit more careful. Look at the control environment also here. Build a complete audit file is what I've said. The third step is get a few complete audit files reviewed independently. Don't wait for peer review board. Don't wait for the quality review board. Don't wait for anybody else. Give it to your friend. Give it to Manoj Gupta sir. He's the best person in Bangalore to do this. Ask him to independently review one audit report, one audit file of yours. There's a purpose why I'm saying this. Not with a view to just say that this is not there, this is not there, this is not there. An independent set of files, looking at the financial statements, looking at the file, can give us a lot of inputs into what we have to actually do to improve. Independent person, I mean, a few of the suggestions can be valid, few cannot be valid, you can always discuss about that, no problem at all. But ensure, it can be somebody in your office also for all you know. It can be somebody in your office also. Get them to review this so that in such a manner that you know that this there. Please don't give them a checklist. Let them do it independently. Let them see what they have to say about this. The other thing which I think I should tell you all is that please remember this risk-reward relationship. What I'm trying to say here is that if there is a risk in audit, there is also a reward. The reward should actually at least be equal to the risk. If the reward is not equal to the risk, it may not be worth doing the audit. Thankfully for us, ICA has given us what is called as recommended scale of fees. Please remember, it's only recommended. We cannot charge it actually. But it's an excellent document to show the client and tell him that ICA is saying 5,000 rupees per hour. I am charging 65 rupees per hour. Just look at what I am doing here. 65 rupees per hour versus 5,000 rupees per hour. I am getting me at a discount actually. So whatever risk is there, please tell me what the risks are. You will not get a better person at such a low risk-reward relationship. At the same time, it can also happen that if the risk is extremely high and the reward is very, very low, can happen in a few cases. You probably have to say thank you very much. I don't want to do this. It may be difficult for us to accept the fact that we have to refuse an audit, but I think as we are moving towards time wherein auditors have to be a little bit more extra careful. And the only way we can be extra careful is by trying to ensure that we don't get into a very risky audit only for the purpose of doing the audit. Pressure will be there. He'll be a known person. He'll be a person who is your client for the last 25 years. ಒಂದೇ ವರ್ಷ ಸೈನ್ ಮಾಡಿ ಸರ್, ನೆಕ್ಸ್ಟ್ ಇಯರ್ ಕ್ಲೋಸ್ ಮಾಡ್ತೀನಿ ಸರ್ ಕಂಪನಿನ ಸರ್. ಗ್ಯಾರಂಟಿ ಸರ್, ಒಂದೇ ವರ್ಷ ಸೈನ್ ಮಾಡಿ ಸರ್, ನೆಕ್ಸ್ಟ್ ಇಯರ್ ಗ್ಯಾರಂಟಿ ಕ್ಲೋಸರ್ ಸರ್ ಕಂಪನಿ. ಒಂದೇ ಕಂಪ್ನಿ ಕ್ಲೋಸ್ ಆದರೆ ನೀವು ಕ್ಲೋಸ್ ಆಗ್ತೀರಾ. Only two possibilities. That is the risk reward relation I'm talking about. Do you really want to do that 1 year only for that one day varsha? Whatever may be the fees which is being done there. I think that stage we are getting into now, wherein we do not know what is going to happen. Because we do not know what is going to happen, we have to be a little bit more careful. So I am always saying that any audit, any assignment, please keep one Lakshman Rekha, don't cross it. It can be in terms of risk, it can be in terms of fees, it can be in terms of what you have to do as an auditor. It may be also in terms of how much you have to compromise. If the amount you have to compromise is too much, maybe it's time to step away and say, no, I can't do this, sorry. It is happening. I mean, how many of you have refused concurrent audits now? What is there in concurrent audits? They are saying partner should be there, I should see his face every day, he should be for 8 hours every day. The manager itself is not going to be there for 8 hours. The CA has to be there for 8 hours, it seems. How is it going to be possible? So again, risk reward relation obviously is good there. So in such cases, my suggestion is that don't worry about that particular thing, just forget about it. Final suggestion is that please repeat these steps every year. You can choose your audit clients, you can choose the files you want to do, you can rotate the files also, and every year please have these 5 steps. Control environment, complete audit file, get it reviewed, risk reward relationship, repeat every single year. Because I told you earlier also, the threat of familiarity is a very obvious threat for all of us. Howsoever well we think we know the client, it's only a thought. We don't know. Please remember that when a situation does arise, clients may act in a certain manner, they may not necessarily tell you that. They will not necessarily tell you that. So that is why I am saying you have to reassess this every year, and I think we need to be a little bit more clear that this is going to be my role as an auditor and this is what I will do. I will not cross this particular. I think that those boundaries we have to set aside very clearly. So this is what I basically wanted to talk about. A couple of closing points before I hand over to sir. If you want, you can also add in any points to what I said, sir. So whatever to come on.
Sir, just I would like to say, most of the people who have just assembled here,
Yes.
small and medium sized clients they have.
Make it.
Points what problems come, certain fallacies, what our professionals we carry. I will just tell you.
Yes, sir.
Like coming to the CARO, whether fixed assets registry is maintained or not, whether fixed assets have been physically verified. We don't bother whether it is really verified or not, we don't tell. Straight we wanted to give a clean report. Fixed asset registry is maintained, fixed assets are physically verified. No evidence will be available.
FIR is not there. FIR also is not there.
Maybe then final when there is a sale of particular asset is there, no workings are available. Then we may give a note, since the information is not available, entire sale process are taken into as a profit on sale.
So
This kind of
how have you been
notes.
certifying that the fixed asset
No, but this is general policy. What else? We have, because client will never say that you give clean report.
Correct.
We ourselves
We
will
asked
just
the
say,
right.
this policy we should make. Then another thing, inventory physical verification. SA 500 says yes, evidence you say 505.
You have to be present also, they say.
Where how many cases we just do physical verification of inventories? Confirmation of balances. Where is the practice in Indian environment to get the confirmation response? Are you at least circulating the confirmations? Response not received. What is the alternate audit procedures being carried? There should be documented. This, because generally what we find,
What they are finding.
these are the problems, particularly small and medium-sized claims. Then we are talking about documentation law like that. Then what is the archiving of the files, they say? What is the mechanism we have? So big fours and all, they will have the
Software.
and softwares and all they archive cannot get. And I go to them because you have to give the requisition also how many days you require the audit file and what will again immediately on the same day reminder will come, yes, you have to return back the files. But that kind of system is not being followed by us. We cannot afford also sometimes maybe.
Correct.
So, but what is the action what we should take? Because some data will be there in physical file, some will be there in soft files also. So at least we should have a checklist, at least which are the information we are keeping in soft file, which are the information we are keeping in physical files. And also what is the archiving date? How do you say that yes, this entire files are assembled on such a date and whether EP is clearing that? Then another what you said at conclusion, that audit summary conclusion, that is very important. I like. Generally what happens, article clerk they will write, a small company will say, negative cash balance are found. He lists out, these are the negative cash balance. You do some repair.
Correct.
That remains, paper remains as it is. Then what will be the status of EP?
That's a good point, very good point.
No, these are things what we have to be very careful. Either if it is negative cash balance, you should not take, don't take up the audit. Ask them set right and then come for audit.
Correct.
Because these are things, then see, though this provision and income tax is there, beyond 10,000 rupees cash should not pay, invariably all the business they will pay.
Yeah.
Then you will say again you will repay. So these are practically what I find the problems are there, where we have to be more careful on these issues.
Exactly.
We should not allow that should be, because now what happens, suppose some query is raised, some supporting is not available. The client will say, Gupta ji knows that.
Correct.
That fellow writes, Gupta ji. What is the fate of Gupta ji?
Good point, good point.
So this is what, how you have raised, what is the query raised, what is the audit response and how it has been concluded.
Thank you, sir. Oh, just to add on to what sir said, I mean, just a couple of things which I thought I'd tell you before we conclude. 5 more minutes. See, he spoke about Caro, he spoke about fixed assets. Always been saying this. As he said rightly, article clerk will go there. Sir, you have FAR. You show some very complicated Excel sheet. It can be anything. But okay, it will be, let's say FAR, okay, FAR is there. Okay, physical verification, that also is there. See, what is not there in Caro checklist, and the Caro question itself is, have these assets been tested for impairment? Should be there, following the third question should be there. Fourth question should be, has it been tested for impairment? That question is not there. Because it is not there, it will never be asked. Because it will never be asked, it will never be answered. So impairment will completely be sidestepped just because it is not there in Caro. We may say, okay, Ind AS is saying that Ind AS that is we will see a calculate when it comes to the Ind AS checklist or the AS checklist. But that you know, sir, last year also it was not there, so this year also is not there. So as he said, that's one thing which I have to be very, very careful about. But I think I agree with what we have our own unique challenges. But what I wanted to tell you in conclusion is that, as I said, NFRA is going to be there, they do that thing. As audit firms, as auditors, the only message which comes across for us is little bit more extra care in our audit documentation. Little bit more extra care in our audit process, procedures, whatever it may be, in audit documentation. That's all we need to do. I am not saying that we are not doing it. I am quite sure that whatever examples I have given you are only exceptions. None of us will sign those balance sheets. I am pretty confident of that. All of those are only going to be exceptions. They have been, whatever, because of circumstances, whatever the case may be, they have done that. But we still have to keep that professional skepticism, as ICA has said, to ensure that none of our clients cross the line. In case they do cross the line, we should not cross the line along with them. I think that is what is very, very important, because see, these regulators will keep coming and they will keep on asking us various questions. The environment has changed now. The environment has very, very much changed now, because please remember that suppose something goes wrong in a company, who will they ask? They can ask the company will say it already happened. Who checked what happened? We owe. So for whatever reason, good or bad, we become scapegoats in this entire situation here. We should ensure that even if something of that sort does happen, or some question is asked, we have got the necessary, as I said, proof that we have done whatever requires to be done there. We have not crossed the line, and we have ensured that our report speaks for itself to how much we have done, what we have done, our report speaks for itself, right? So this is what I wanted to tell you all about. Thank you very much for a very patient hearing. Thank you. Thank you.
Members, regulators upon regulators, no doubt there is an eagle's eye on the eagle itself. NFRA overlooking the profession of chartered accountancy for more than half a decade as of now. Our regulators have become very active. Investor protection group becoming very active. Members in practice, it's for us now need to be more active than as usual from now onwards. Going forward, it is the takeaway from this session. There was a saying, in God we trust and rest we get audited. Should we regain that trust again going forward? Thank you CA Mohan R Lavi sir for that wonderful 2 hours interactive session. Thank you so much. A round of applause for that. Members present here and all the managing committee members of Bangalore branch of SISFICI, we would like to thank Mohan R Lavi sir. As a token of gratitude and respect, we would like to hand over a gift voucher, and can I request the chairman sir to come on to dais and then do the honors. Thank you, sir. Thank you, each one of you, for your support to Bangalore branch. Have a scintillating Saturday.
May not be worth doing the audit. Thankfully for us, ICA has given us what is called as recommended scale of fees. Please remember, it's only recommended. We cannot charge it actually. But it's an excellent document to show the client and tell him that I say 5,000 rupees per hour, I am charging 65 rupees per hour. Just look at what I am doing here. 65 rupees per hour versus 5,000 rupees per hour. I am getting me at a discount actually. So whatever risk is there, please tell me what the risks are. You will not get a better person at such a low risk-reward relationship. At the same time, it can also happen that if the risk is extremely high and the reward is very low, can happen in a few cases. You probably have to say thank you very much. I don't want to do this. It may be difficult for us to accept the fact that we have to refuse an audit, but I think as we are moving towards time wherein auditors have to be a little bit more extra careful. And the only way we can be extra careful is by trying to ensure that we don't get into a very risky audit only for the purpose of doing the audit. Pressure will be there. He will be a known person. He will be a person who is your client for the last 25 years. One ವರ್ಷ ಸೈನ್ ಮಾಡಿ ಸರ್, ನೆಕ್ಸ್ಟ್ ಇಯರ್ ಕ್ಲೋಸ್ ಮಾಡ್ತೀನಿ ಸರ್ ಕಂಪನಿ ಸರ್. ಗ್ಯಾರಂಟಿ ಸರ್, ಒಂದೇ ವರ್ಷ ಸೈನ್ ಮಾಡಿ ಸರ್, ನೆಕ್ಸ್ಟ್ ಇಯರ್ ಗ್ಯಾರಂಟಿ ಕ್ಲೋಸರ್ ಸರ್ ಕಂಪನಿ. ಒಂದೇ ಕಂಪನಿ ಕ್ಲೋಸ್ ಆದರೆ ನೀವು ಕ್ಲೋಸ್ ಆಗ್ತೀರಾ. Only 2 possibilities. That is the risk reward relation I am talking about. Do you really want to do that 1 year only for that 1 year? Whatever may be the fees which is being done there. I think that stage we are getting into now, wherein we do not know what is going to happen. Because we do not know what is going to happen, we have to be a little bit more careful. So I am always saying that any audit, any assignment, please keep on Lakshman Rekha, don't cross it. It can be in terms of risk, it can be in terms of fees, it can be in terms of what you have to do as an auditor. It may be also in terms of how much you have to compromise. If the amount you have to compromise is too much, maybe it's time to step away and say, no, I can't do this, sorry. It is happening. I mean, how many of you refuse concurrent audits now? What is there in concurrent audits? They are saying partner should be there, I should see his face every day, he should be for 8 hours every day. The manager itself is not going to be there for 8 hours. The CA should be there for 8 hours, it seems. How is it going to be possible? So again, risk reward relation obviously is good there. So in such cases, my suggestion is that don't worry about that particular thing, just forget about it. Final suggestion is that please repeat these steps every year. You can choose your audit clients, you can choose the files you want to do, you can rotate the files also. And every year, please have these 5 steps. Control environment, complete audit file, get it reviewed, risk-reward relationship, repeat every single year. Because, I told you earlier also, the threat of familiarity. The threat of familiarity is a very obvious threat for all of us. Howsoever well we think we know the client, it's only a thought. We don't know. Please remember that when a situation does arise, clients may act in a certain manner. They may not necessarily tell you that. They may not necessarily tell you that. So that is why I am saying you have to reassess this every year, and I think we need to be a little bit more clear that this is going to be my role as an auditor, and this is what I will do. I will not cross this particular. I think that those boundaries we have to set aside very clearly. So this is what I basically wanted to talk about. A couple of closing points before I hand it over to. Sir, if you want, you can also add any points to what I said. Sir, so whatever, come on.
Sir, just I would like to say, most of the people who have just assembled here,
Yes,
small and medium size clients they will be having.
make it.
Points what problems come, certain fallacies, what our professionals we carry. I will just tell you.
Yes, sir.
Like coming to the CARO, whether fixed assets registry is maintained or not, whether fixed assets have been physically verified. We don't bother whether it is really verified or not, we don't tell. Straight we wanted to give a clean report. Fixed asset registry is maintained, fixed assets are physically verified. No evidence will be available.
FIR is not there. FIR also is not there.
Maybe then final when there is a sale of particular asset is there, no workings are available. Then we may give a note, since the information is not available, entire sale process are taken into as a profit on sale.
So
This kind of
how have you been
notes.
certifying that the if doesn't?
No, but this is general policy. What else? We have the client will never say that you give clean report.
Correct.
We ourselves
We
will
also
just
say,
say,
okay, right.
this policy we should make. Then another thing, inventory physical verification. SA 500 says yes, evidence you say 505.
You have to be present also, they say.
Where how many cases we just do physical verification of inventories, confirmation of balances. Where is the practice in Indian environment to get the confirmation response? Are you at least circulating the confirmations? Response not received. What is the alternate audit procedures being carried? There should be documented. This, because generally what we find,
What they are finding.
these are the problems, particularly small and medium sized claims. Then we are talking about documentation and all like that. Then what is the archiving of the files, they say. What is the mechanism we have? So Big Fours and all, they will have the
Software.
and softwares and all they archive cannot get. And I go to them because you have to give requisition also how many days you require the audit file and what again immediately on the same day demand will come, yes, you have to return back the files. But that kind of system is not being followed by us. We cannot afford also sometimes maybe.
Correct.
So, but what is the action what we should take? Because some data will be there in physical file, some will be there in soft files also. So at least we should have a checklist, at least which are the information we are keeping in the soft file, which are the information we are keeping in physical files. And also what is the archiving date? How do you say that yes, this entire files I have assembled on such a date and whether EP is clearing that? Then another what you said at conclusion, that audit summary conclusion, that is very important, I like. Generally what happens, article clerk they will write, a small company will say, negative cash balance are found. He lists out, these are the negative cash balance. You do some repair.
Correct.
That remains, paper remains as it is. Then what will be the status of EP?
That's a good point, very good point.
No, these are the things what we have to be very careful. Whether it is negative cash balance, you should not take, don't take up the audit. Ask them to set right and then come for audit.
Correct.
Because these are the things, then cash, see, though this provision and income tax is there, beyond 10,000 rupees cash should not pay, invariably all the business they will pay.
Yeah.
Then you will say, again you will repay. So these are practically what I find the problems are there, where we have to be more careful on these issues.
Exactly.
We should not allow that should be, because now whatever, suppose some query is raised, some supporting is not available. The client will say, Gupta ji knows that.
Correct.
That fellow writes, Gupta ji. What is the fate of Gupta ji?
Good point, good point.
So this is what, how you have raised, what is the query raised, what is the audit response and how it has been concluded.
Thank you, sir. Oh, just to add on to what sir said, I mean, just a couple of things which I thought I'd tell you before we conclude. 5 moments. See, he spoke about Caro, he spoke about fixed assets. Always been saying this. As he said rightly, article will go there. Sir, you have FAR. You show some very complicated Excel sheet. It can be anything. But okay, it will be, let's say FAR, okay, FAR is there. Okay, physical verification, that also is there. See, what is not there in Caro checklist, on the Caro question itself is, have these assets been tested for impairment? Should be there, following the third question should be there. Fourth question should be, has it been tested for impairment? That question is not there. Because it is not there, it will never be asked. Because it will never be asked, it will never be answered. So impairment will completely be sidestepped just because it is not there in Caro. We may say, okay, Ind AS is saying that Ind AS that is the, we will see a calculate when it comes to the Ind AS checklist or the AS checklist. But that you know, sir, last year also it was not there, so this year also is not there, sir. So as he said, that's one thing which I have to be very, very careful about. But I think I agree with what we have our own unique challenges. But what I wanted to tell you in conclusion is that, as I said, NFRA is going to be there, they do that thing. As audit firms, as auditors, the only message which comes across for us is little bit more extra care in our audit documentation. Little bit more extra care in our audit process, procedures, whatever it may be, and audit documentation. That's all we need to do. I am not saying that we are not doing it. I am quite sure that whatever examples I have given you are only exceptions. None of us will sign those balance sheets. I am pretty confident of that. All of those are only going to be exceptions. They have been, whatever, because of circumstances, whatever the case may be, they have done that. But we still have to keep that professional skepticism, as ICA has said, to ensure that none of our clients cross the line. In case they do cross the line, we should not cross the line along with them. I think that is what is very, very important, because see, these regulators will keep coming and they will keep on asking us various questions. The environment has changed now. The environment has very, very much changed now, because please remember that suppose something goes wrong in a company, who will they ask? They can ask the company will say it already happened. Who checked what happened? We owe. So by for whatever reason, good or bad, we become scapegoats in this entire situation here. We should ensure that even if something of that sort does happen or some question is asked, we have got the necessary, as I said, proof that we have done whatever requires to be done there. We have not crossed the line, and we have ensured that our report speaks for itself to how much we have done, what we have done, our report speaks for itself, right? So this is what I want to tell you all about. Thank you very much for a very patient hearing. Thank you all.
Members, regulators upon regulators, no doubt there is an eagle's eye on the eagle itself. NFRA overlooking the profession of chartered accountancy for more than half a decade as of now. Our regulators have become very active. Investor protection group becoming very, very active. Members in practice, it's for us now need to be more active than as usual from now onwards. Going forward, it is the takeaway from this session. There was a saying, in God we trust and rest we get audited. Should we regain that trust again going forward? Thank you CA Mohan R Lavi sir for that wonderful 2 hours interactive session. Thank you so much. A round of applause for that. On behalf of members present here and all the managing committee members of Bangalore branch of SISF ICI, we would like to thank Mohan R Lavi sir. As a token of gratitude and respect, we would like to hand over a gift voucher and can I request the chairman, sir, to come on to dance and then do the honors. Thank you, sir. Thank you, each one of you, for your support to Bangalore branch. Have a scintillating Saturday.